Good morning, everybody. Hey, welcome to Thursday, June 18th. I hope that your week has been going well. Hey, 2 more days, today and tomorrow, and you're at the weekend. Looking forward to some time with family this weekend for sure. Hey, as we get started yesterday, unfortunately, kind of came true as to what I said earlier, that we would definitely see us start in the green, end in the red. And unfortunately, that is what happened yesterday as we prepare to see where we go from here. I'll let you know, Carnival Cruise Line reported wasn't good. Stay tuned to find out what those numbers look like and what it's doing to its stock. Looking forward to my conversation with Dave today. So we look at first-time unemployment claims again. Those will be the big number today and may drive the market up or down. We'll have to wait and see.
5 point. Hello there. Glad you're here today. It's 8:40, 20 before 9. Time to check in and find out how Wall Street is doing this morning. It was one of those days yesterday. We hate to say it, but we predicted it was looking like it was going to happen. We started out gangbusters and started heading south, and yep, we ended up on the red side for two of the major indexes by the end of the day. Let's see if we can turn the corner today and improve things. So far, doesn't look like we're accomplishing it, but at least we're going in the right direction. Downtown Sebring, the offices of Statler Financial Services, is where we find Phillip Statler standing by. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today? Yeah, I know. It's sad that we were right yesterday, but hey, that's what happens some days. You call you call it the way you see it, and you're right. Yeah, it doesn't happen all the time, though.
No, and I hate to crow when we're right and it's a negative result. It's much more fun crowing when we're right and it's a positive one, isn't it?
Yeah, absolutely. You're so right there. It's always nice to be right, not wrong.
Yeah, that's true. Setting that table, just so that folks know what we're talking about, the Dow started out strong in the morning on the futures, but it was trending in the wrong direction when we spoke. Ended up the day down 170 points, which really isn't, and the net anything exciting given all the swings we're seeing lately. NASDAQ eked up 14 points to the positive, and the Standard & Poor's index yesterday ended up down by about 11 and a quarter. Which kind of brings us up to this morning and the Thursday jobs report. It was an improvement over last week, but not quite as big an improvement as our projections were hoping for. 1.51 million first-time jobless claims last week. A little bit of a disappointment based upon what some of your analysts were saying, right, Phillip?
Well, yeah, pretty much everything. There's a few variations, but most everybody I saw was expecting 1.3 million first-time claims, and it came in at that 1.5 million, which was down from the previous week. The previous week they adjusted it up a little bit to 1.566 million. So better than the week before, but not near what everybody was expecting. It was kind of in line with what I expected, but I'm not an economist. So I still feel like we're going to see more and more first-time claims as we see the ending of the payroll protection plan. And that's going to continue to roll out here in the next few weeks.
I was going to say, you mentioned that as kind of a cautionary note back about a month ago, that the payroll protection loans meant that the people who got them had to guarantee that they kept their employees on. Was it middle of June or last of June they had to do it?
It depends on when you got the loan. 8 weeks from the time you basically got the loan proceeds. And you could have gotten the loan proceeds anytime from about the second week of April through, actually you can still get it right now. You could apply for it and get it up until June 30th of this year.
All righty. So looking at it so far, we're seeing a hopeful trend. I guess USA Today was the only place that actually nailed it, because I had an article in there this morning saying that they figured it was going to be about 1.5. The rest of us basically all were looking at analysts saying, a little lower than that. But still, we're looking at a trend over 6 million back in the first week in April, and it's been trending pretty evenly downward in terms of jobless claims ever since. As you say, now we're looking at the notion of some of those guarantees for employees are running out. And the question is, can we recover the economy fast enough to have businesses keep those employees on? The Philly Fed Index was one of the surprises that was on the pleasant side today. Last month, they showed a negative 43.1. Again, all of these indexes get calculated differently, so it's direction and number that matters, not how they figure it out. Minus 43.1 last month. And Phillip, this month, they issue it up to positive 27.5. That's like a 180 in a really surprising direction, isn't it?
Yeah, I've got to think that's obviously got to be good news. That's a pretty good size swing for the Philly Fed, and so that means that maybe some of that northeastern area is getting back to work up there.
And they are starting to do some reopenings, and assuming the increase in testing positives don't continue the way they are, if the openings continue, that indicates good news. And we've kind of had confirmation of the other Fed reports, too. They've been showing positive moves, nothing swinging from all negative to all positive. But at the very least, we're seeing some good effects in the economy as we start the reopening.
We are. We're definitely seeing some more, but there are some things that still are throwing me some caution, and that's even here locally in St. Pete. I saw that several bars and restaurants had opened up because they could, and now because they had an employee that had got tested positive for COVID-19, have actually closed again for cleaning and all that kind of stuff. So that's going to be interesting to watch that develop and how that plays out. Do we see more and more of that now that everybody's back out into the to the hustle and bustle of our economy?
Yeah, there's been a smattering of stories about bars and eateries that have had to close after substantial reinfections from customers getting a little close, getting a little crowded, and I really hate using the term, and bottom line, though, customers being stupid as the bars and the restaurants reopen. They can't say it enough, people. Keep separate because we still do have a bug out there. We got to reopen. There isn't much of a choice economically, but being dumb isn't a good idea either.
No, yeah, you're absolutely right. I mean, it takes common sense, and we need to be patient and do the right thing for ourselves and for our communities.
Absolutely. I do have a couple of companies that reported their quarterly earnings, and it was kind of an interesting selection, a grocery store company and a cruise line, which you got to kind of put two and two and assume one's going in the good direction and the other's going in the wrong direction, right?
Yeah, let's look at good news first, Dave. We got Kroger Supermarket reported quarterly earnings of $1.22 a share. They were expected to come in at about $1.09 a share. Revenue was above estimates. Everybody's heading to the grocery store, not much other place you could go. And so they said they expect to exceed their outlook that they issued back on April 1st. So when I looked a minute ago, they weren't up by much, and actually right now they're down about 1/3%. So I guess they're not. People aren't getting excited about the grocery stores right now.
That cautionary tale: don't give guidance, for gosh sakes, because it costs you even when it's good, right?
That's right. So the other one we have is Carnival Cruise Lines. They've issued a preliminary quarterly loss of $3.30 a share. More than double expected. They anticipated $1.56 loss per share. The revenue figures are below the estimates. They expect to have a net loss for the second half of the year also. They are, though, pushing out, right, demand. What can you do? Push out demand for 2021. People, it's going to be almost a year before anybody has really been able to cruise. And so demand in 2021 is moving in the right direction. But they are trading down this morning about 7.25%.
And I'm looking at all the other cruise lines that are kind of following suit. I saw an article, Norwegian Cruise Line said, hey, blame the CDC for all of our problems. Well, duh.
Exactly.
They're pretty much all following suit, although Carnival being the one that admitted the bad news this morning, they're kind of the top of the loser list as it goes. You bring up a point. I've got to assume pent-up demand, once we do feel comfortable, the cruise lines are just going to boom when things feel a little bit more safe, aren't they?
I think so. People are going to be tired. I mean, I know a lot of my clients love to cruise, and they'll take 2 or 3 cruises a year. And so those folks right now can't do that, and so they're going to want to try to catch up next year.
Now, I got a couple of cruise aficionados in the company here, too, and I think they're probably getting a little case of the heebie-jeebies about not being able to get their sea legs back, aren't they?
Yeah, I think so.
It hits. Resetting the table for the morning. As we said, it was a mixed bag yesterday. Dow and the S&P were both off. It's kind of funny when we talk about 0.5% and better being a modest loss for the day, but relative to what we've seen, it wasn't much. NASDAQ was up by a tinge 45 minutes before we throw real money around this morning, Phillip. You and I were talking about how we were seeing an improvement after that Philly Fed report. Where are we 45 minutes early?
You know, it's bouncing. It has improved from when you and I first went on the air. Right now, the Dow is down about 0.7. That's $186. The S&P 500 is down about 0.5 point, a little over $16, and the Nasdaq's down less than 0.5%. So down $4.75 right now. So they're looking the best as we get started. Commodities are all trading down, at least the precious metals are. We've got silver down 1%, gold down 0.5%. Crude oil is ticking up just a little bit, up 0.5% to $38.17 a barrel.
38. Okay, well, that's improving a little bit over my delayed quote. That's good to see.
Yeah.
International markets, the Asian Rim basically was all off. Add our problems from yesterday to the fact that they've shut down a whole pile of the markets in Beijing because of a coronavirus scare there, and they were trading down. Europe is kind of off a little bit this morning based on nerves from us as well this morning, between 1 and 1.33% on the European markets. Phillip, this is one of those times where we look at stuff, you see something in the morning, you see a trend, and it's a U-turn by the end of the day. If you're close to retirement, that's got to make a person nervous. How do I get a hold of you to stabilize my retirement fund?
And then give us a call at 863-382-0037 to schedule their financial x-ray, get a second opinion, make sure that you're going in the right direction and you don't have too much risk in your portfolio. Hey, join us every weekend for the Statler Financial radio show, 6 a.m. and noon on Saturday, 10 a.m. Sunday mornings, on Highlands News Talk, 7:30 a.m.
Which streams at newstalk730am.com, just like we do here at 1057lightfm.com, where we're going to be again tomorrow morning, same time. Fair enough?
Fair enough, man. You have a great day. I look forward to tomorrow.
I thank you kindly. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Wait and see. You know, when you can't predict the future, that can be a good strategy. But wait and see isn't always a good strategy when it comes to your retirement. In these uncertain times, the decisions you make today regarding your savings and investments can have a huge impact on your retirement. Phillip Statler and the team at Statler Financial have seen the market at its highs, its lows, and everywhere in between. They know how emotional it can be for you right now. So here's what they're doing. They're clearing their schedule to talk with you on the phone or on a video call to listen to what concerns you have and then offer help. The number to call is 863-285-3815. They are local and independent advisors who can help guide you through this. Call Phillip Statler and the Statler Financial team now. 863-285-3815 and schedule your time for a phone or a video meeting with the team. Call 863-285-3815. That's 863-285-3815. Investment advisory services offered through Statler Financial Services, Inc. Investing involves risk, including the potential loss of principal.